Hi, I'm Larry Berman, and here's what's on my radar this week. Well, there's a reason Congress has an approval rating that's not even a teenager. The clowns that are running the U.S. government are really quite something. They say one thing, they just can't do it. The political system is so broken in my mind. It's really staggering. So Pelosi and McConnell couldn't agree. The Senate today passed a stopgap spending bill for a week, kicking the can. They can't figure it out. These guys are just mind-numbingly dumb. There's no other way to put it. They'll get something done. They always do at the last minute. Maybe the government shuts down, but I can't imagine either side wants to do that. From a seasonality perspective, the fourth quarter right now where we are is very, very bullish into year end. And normally first quarter is pretty good in any given year, and the exception being the first year of a presidential cycle, where actually the first year is not actually that good on average. So we've got some risk that the markets are priced for perfection. As we get into Q1, we could see a little bit more volatility. Not a lot, but a little bit more, because there will be more spending, there will be more debt monetization. And so seasonality positive for another couple weeks, but negative as we get into the first part of next year. Global debt with a negative yield just passed $18 trillion on what the ECB said this week was an increase yet in more money printing and more stimulus. Greek and Portuguese yields are now trading at negative yields. I mean, you want to pull your hair out. They keep doing more of the same. The Japanese central bank owns something like 20% of all the ETFs issued in Japan. It's just mind-numbing what central banks are doing to stimulate aggregate demand and growth, and it's simply not working. It's stabilizing, but it's caused a incredible misunderstanding and misallocation of risks. And as long as the central banks keep doing it, markets will be okay. But to me, it underscores why you want to be long gold and gold equities. And so as we get into our bull and bear picks of the week, we really think that the index rebalancing is going to put some pressure on the NASDAQ names and the big names as we rebalance Tesla into the S&P 500, and some of the big names need to be sold. So, put spreads and an outright short on the NASDAQ relative to being long other parts of the market. That's key. Just being outright short here is a little bit risky. As we get into the first quarter, probably a little bit better suited. So ratio put spreads remain our bear pick on the NASDAQ. In terms of our bull pick, it's gold and it's gold equities. They're starting to form a little bit of a bottom. We've moved off the recent lows. We think there's tremendous upside in these still. Have faith. Don't get caught up by the noise. Negative real yields and central bank monetization are wildly bullish for the asset class. Well, that's it for the week. Remember, follow us on YouTube channel. We're almost up to 6,000 viewers. And on Twitter this week, just past 10,000 followers. Thank you, Twittersphere. Have a great week, everybody. Stay safe.